All right, Quasar Markets Live. You've been asking for Jim Iuorio. Here we go, brother. The markets are crashing, right? It's CNBC markets in turmoil day, right?
In turmoil. Okay, so about that. Okay, let's put a couple things in perspective real quick. Like, let's say the NASDAQ trades back down to its 200-day moving average. That would represent a 15% move from the highs. It's way, way, way stretched above its 200-day moving average. We all know why. So the question then becomes, is AI in a bubble? And I think the answer to that is yes, AI is in some level of bubble. And I fully expect it to have about a 30% haircut sometime in the next year and a half. I'm sure I've said that to you before too. What gave me that indication that it was a bubble was that those 2 weeks ago or 3 weeks ago when OpenAI, all they had to do was mention another company, and whether it be AMD or broadband, that company stock would rally 10%. To me, that smacked of some sort of manic fervor that's in the markets. Now, by the way, thinking that it's in a bubble doesn't do you any good because you never know when the bubble's actually going to pop. So you look at it today and say, is today the big day? I say the answer to that is no. I say, just what? Sorry.
Yeah, all right, Jim. We're just getting right into that. I love it. And the way that you were talking about is that the bubbles. I was just in New York Stock Exchange over the weekend and Monday especially. And are we in an AI bubble? And I said, we've already had 2 bubbles. What are you talking about? Of course we were going to bubble. We're going to bubble and burst and grow and bubble and burst and grow again.
Yep. Oh yeah, and the AI story is very, very real. There's nothing that I don't like about the AI story. I think it's real. I think that it is disrupting the labor market already. And I think it's one of the reasons that Jerome Powell is so quick to lower rates, because I think he's very, very worried about what the labor market does in the next year. And I think part of that is the AI story. Companies that aren't necessarily firing, but they are not hiring. And by the way, so there's 2 elements to that as well. So what matters most is their belief of what AI can actually do for them. I'm talking about the Walmarts, the Amazons, the banks of the world, not necessarily what it can actually do. That's a story for a year from now if it disappoints. But right now they aren't hiring and they're replacing people with AI. Another element I'd like to add today too is the government reopens last night. And what happens? Stock market rallies about 10 ticks, then drops about 100. I'm talking about the S&P. To me, that's the equivalent of an earnings beat that gets rewarded with punishing the stock price. To me, it means there are a lot of people who are looking to get out. Might have been a specific buy the rumor, sell the fact, or it might mean that things are stretched to a point where they could, the bubble could begin to pop. And I'd like to see it go back down to the 200-day moving average. And at that point in time, we'll see what legs it has to the downside.
All right, Jim. So Dow at 48,000 yesterday. I was asked personally, do I smell 50,000? The answer is yes by this year, right?
Okay. I mean, I have no problem with that. Like I said, I don't believe that this is the beginning of the end. People our age, we've experienced 2 bubbles cracking. So every time we have a 500 down day in the NASDAQ, it's like we clutch ourselves. This time it is a tiny bit different because there is some stretch. But until I see, like on the weekly bar chart, we've just gone in between the 8 and the 21, which we call the rotation zone at the Unfiltered Investor. And if it finds some support in there and comes back out of it, I think we could be absolutely fine. And I can actually get you some levels on that. I have it right up on my handy dandy computer right here.
You're welcome to put that chart right up on the system. I'll put it in there for you if you want.
I don't know how to do that.
All right. So what are we looking at? I'll put it up there.
So we are looking at NASDAQ. I have the NQZ up, but it could be NQ1, the first contract, and like a year and a half weekly bars, and then put the 8 and the 21 day up, or 8 and 21 week. I'm sorry, because I think this is a really interesting chart. Okay. All
right. There's the NQ's 100 E-minis. All right. Here we go.
Okay.
That's the daily chart. So what do you want me to add to it?
I want the 8 and 21 moving averages. I prefer exponential, but whatever you grab is fine because they're pretty close. But then I'd like you to change it to weekly bars, because on the daily bar, it's definitely broken down. But I'm talking about for like the big ones.
There's your weekly bar right there. And you want the EMA. So yeah.
Yep.
I have a lot of
guys. Just to fill dead air, because Stephen and I have been on media for so long, I will tell you that the Unfiltered Investor, this is one of our key metrics, is the 8 and 21 exponential moving average. We call between it the rotation zone, and here's what we like to see. And The NASDAQ did it last week. It traded into the rotation zone and then traded back out of it. Now, to me, that was a sign of strength, except for the fact that today we've gone back into it and we're trading on the beat lows. So I'll tell you what I need to see is I need to see it come back out of it, which would be about, let's call it a trade back to above about 25,350, 25,350. So I'll show you, put it on real quick, because I think you're going to like this sort of metric.
Yeah. So they got the 9 on there. Now I'm going to add the 20 to it. So and on this one, you want me on the 20, right? So
21.
All right. So 9 and 20.
The 9 will be fine. 20.
All right. There it is. There you go.
Okay. So notice that last week it came back into that rotation zone and then rejected it. And now it's back in it again. And now we need to come back above the 8 exponential, which that would be about 25,400 to come back out of it. And if we can just tomorrow finish that week strong, if we can bounce back, then I'll think this was just all noise designed to wipe out the latest comers to this rally. My point is that we could experience some short-term volatility. To me, that doesn't mean the bubble's popping. And at the same time, I know I've said the bubble is being created, but I still think we're in about, again, that's an excellent trend line too, by the way. I was noticing that as well. So I don't think that the big one is happening. Do I see a volatility over the next couple of weeks? Potentially, yes. I'll think it's over if we get some strength tomorrow and close strong above that 25,350 level. By the way, what's that circly thing?
Yeah,
that's really
yeah, the Fibonacci sequence. I mean, if you look at the latest sell-off back in September, it's rounding about my Fib seeks. So, and I think you're right. I think if we hold here, I think we can go right on up.
Yeah, I don't think it's a problem yet. Which, by the way, the veracity that we're down 566. So that means there were some weekends who aren't very comfortable right now, and that could turn into something bigger. But right now, I don't believe that it is.
Yeah, looking at Bitcoin, there's a lot of liquidation in the longs there. I think they're just looking, I think this NASDAQ, all of this is really just scaring people, because if you look at the weeklies, we're only back 3 weeks ago.
Exactly. So that's nothing. Which, by the way, you mentioned something that I meant to talk about and I didn't. And Bitcoin, there was a day last week that Carly Garner posted it as it was happening, as Bitcoin was dropping, dragging other risk assets with it. Now, we didn't, even up until last week, I wasn't even sure Bitcoin had that power to be the one that if it starts cratering, others get pulled down with it. Well, now today, I'm fairly convinced that it is. As soon as that baby broke through 100,000, forget about it. I actually think 80,000 is in the cards right now.
80,000. Okay, that would bring us all the way back to March and April, where the big sell-off happened, right? Is that what you're saying?
Right. Yes. Again, and Bitcoin's a volatile thing. If you're in Bitcoin, and believe me, I am in Bitcoin, and we've talked about my position in Bitcoin too. I wanted it to be 2 or 3% of my net worth, but and it grew to about 6% just by virtue of the fact that it kept rallying and rallying. I didn't want to take a tax break, so I'm buying no more Bitcoin. So have I taken a big hit over the last couple of weeks? Yeah, I've taken a huge hit. But if you're in Bitcoin, you have to know that it is a volatile instrument, a highly volatile instrument. It trades with a correlation in the stock market, and right now it's leading stock markets lower.
Do you think we need to make a turn in Bitcoin to make the market go back up?
No, I don't think that necessarily. I think it has the enough pull to start the move, provided that the stocks are stretched like they were as well. But I don't think that necessarily means if Bitcoin continues lower, the equity markets get pulled down with it. I think that's just, it was like the gun that starts the race, in my opinion.
Yeah, and let's talk about some things that are important, as in the United States government is probably going to start back up tomorrow, I guess, restart. Has there been permanent damage from this close?
Well, here's the permanent damage that I hope has happened. And that's that I hope there is a healthy mistrust of government economic data going forward. I wanted focus to switch from the BLS numbers for unemployment data to perhaps ADP numbers, JOLTS numbers, the numbers that come out with private companies. Now, those numbers aren't perfect either, particularly JOLTS because it has a low response rate. But I'd rather traders and analysts look to those numbers than look to the BLS garbage. CPI, we have alternatives for CPI as well. Trueflation is a better number, which, by the way, everybody trades off CPI. I know that. And I assume that that's going to be what happens going forward as well. So I can't be the one, or you can't be the one saying that's a stupid number, let's not trade off it, if everybody else is. So you just kind of have to jump into the pool. But I'm hoping that we start to look at true inflation, which, by the way, is running at about 2.55. And I don't think inflation is going to be that big of a problem in 2026. See it? Can't hear you, Stephen. Are you still there?
Yeah, I mean, I'm looking at inflation now here, and you can still see it's still pretty high. I mean, the Fed says, hey, you got to be under 2%, and we did it back in March and April, but here we go, marching right back up on inflation. I mean, I have to ask, God, I don't even want to say this to you too loudly, but Mary Daly this morning, what was that all about? I don't understand this world. I don't understand the market. Why are you a federal president? Why are you the board of governors then? Right? I mean, she's saying AI and all this. She doesn't understand all this. Well, I'm confused.
Well, the one thing that's funny is that we've always looked at them like they have some sort of insider knowledge, and they don't. They're picked as political appointees for the most part. So the fact that Mary Daly doesn't understand it, great. Join the club, Mary. I think that the reason I'm not worried about inflation, well, first of all, I think Jerome Powell is more worried about inflation than you think, but not in the way everyone else thinks. I think he wants it to run at about 2.7 for the next 2 years. I think he thinks
because of growth.
That's the only way to get growth and to monetize the over-indebtedness of the federal government, 5 states, countless counties and municipalities around this country, is to have them pay off their debt in cheaper dollars. I think he wants inflation to run 2.7. I think he's also worried about AI disrupting the labor market. I think he's worried about supply side solutions coming from the federal government that's going to encourage people, through deregulation to produce, and those could handle inflation in the 2026 side. So that's why I think Powell has said, okay, I'm putting that in the back shelf and just addressing the labor market, which is a big deal. And again, places like Walmart and Amazon, firing people, that's one thing. Well, Walmart is just not hiring people. And again, it's the same thing. If they slow down hiring because they think AI is going to be this big efficiency and productivity booster, then that's going to reflect very negatively in the labor market. And I'm not sure if they're right or not, but we won't know that for 6 months.
And I'm going to pull up a chart here. I saw this this morning again. I posted it on our own Quasar Markets Twitter feed. Mortgage rates in America. People don't understand that mortgage rates are different everywhere, right? So when you're looking at the economy, and you're talking about AI, you're talking about data centers, you're talking about all the things we just talked about, it seems that the mortgage rates are telling people where they should be living, right? Or where they're having problems in the country.
That is a really interesting thing. And by the way, this is somewhat news to me. I kind of intuitively believe that too, but I think you're absolutely right. And I think what's really interesting is that, wow, look at California.
4.5%.
Yeah, who the hell would live in California? But anyway, but you can't talk about the mortgage rate thing without talking about Donald Trump. You're talking about 50-year mortgages. It's not as terrible idea as everyone says. It's the same thing as an interest-only mortgage. It's not for everybody, and most people will get screwed by having it. But for responsible, disciplined people, it's another option. It's fine. What really would be interesting is if they figure out a way to make mortgages portable, like in some other countries they do. Because I think one of the things that happened in the real estate market is when you raise mortgage rates from 2.8% to 7.5% in 10 months time, that rapidity has never been equaled any time in our history.
Nobody wants to leave when they got 3%. And nobody wants to leave when they got a 3% mortgage.
Bingo. I remember, and I'm hoping my wife will never watch my podcast. I'm watching her fill out, she pays all the bills. And this is about a year and a half ago. And I'm like, oh, what's that one for? She goes, oh, I give an extra payment to pay down the principal in the mortgage. We didn't even have a mortgage until 2020 when the rates went to 2.8. That's the only reason I got a mortgage. And I'm like diving across the table. No, don't pay that off. We want to keep that debt as long as we can. And again, she's an attorney. She's bright as hell, but people don't think that way like you and I think.
Right. Well, I mean, I think that, obviously people still get the itch to move, but a 50-year mortgage only helps the banks. And you're only paying rent to the bank as opposed to the renter. I mean, it feels like to me, right?
Right. But if you think that the federal government is going to keep increasing M2 money supply, keep depressing the price of the dollar, and you want to be in hard assets, and it allows you to be in the asset you want, it can work out. I'm not advocating for them at all. I'm just saying it's Thomas Sowell, is that there are no solutions, there are only trade-offs. The trade-offs for having a 50-year mortgage are a lot of them are very, very negative, because you could be a slave to the bank forever. But if you use it effectively, it could work out good.
Unless you have Jim Iorio's wife who'll pay it off early.
She'll pay it off early. Exactly. Right. Yeah. Oh, man, that woman. Love her.
Hopefully she's not watching that one. All right.
She'll never watch me.
I love this. I'm gonna give you one more, then I'll let you go. I know you're a busy guy. You know, I was asked by Carolyn Woods my thoughts on the rest of the year, how we trade, up or down, and I said sideways. What's your thoughts, Jim?
So I'm going to answer that again. I'll answer to it via Twitter. I want to see how the market trades tomorrow. I want to see if it pops back out in the 8 and 21 on the weekly. And then on Monday, if it can go above today's bar at all, then I'll think that this was just a bad fever dream and we're heading into the highs and the close. But every time we get this kind of curveball like today, it's prudent to step back and say, okay, how many is this going to have wings or not? And I think we'll know that within the next 2 days.
All right, so I'm going to pull it up for everybody here. I expect everybody here that's watching this right now, and you all know my thoughts about Jim. He's an awesome guy. I'm going to put up the unfiltered investor. So there it is. I'm going to put it up so you guys can see the link there. I'm going to show it so you can click on the button now. You can actually click to go see Jim's thought process, and not just Jim. You have a whole group of people over there, right?
Yeah, I think that Mike Arnold, and to a somewhat lesser extent Bobby Iuorio, not trying to dog Bobby, but Mike Arnold is our chief technical analyst, and it took me a year to figure out what the hell he was talking about. And then once I did, I was like, oh man, this makes so much sense. And he's really an amazing technical analyst.
All right, Jim. We'll see you right back here next week. I know you're busy, but stay warm, my man.
Thank you, brother.